Hello, and welcome everyone to our financial and economic analysis of Apple Corporation. In today's analysis, we will tell you why we've rated Apple stock as a buy and how we performed our analysis to form our opinion. Our buy rating of Apple is based on 10 separate analytical analyses, which we will discuss in sequential order. The first is that Apple has had a solid 9% compounded average annual growth rate in their revenue over the last 10 years. In comparison, Apple's 2022 revenue is second only to Amazon among the highest weighted stocks in the S&P 500 index and the FANG stocks. The FANG stocks, as you might know, include Facebook, Amazon, Apple, Netflix, and Google. Second, Apple has a well-established and interconnected product line. For example, Apple's iCloud services seamlessly connect and share user data among its various devices, the result of which is that Apple collects roughly half its revenue from iPhone sales and the balance comes from its other interconnected products. Third, Apple generates revenue from around the world where more than one-third comes from North America and South America, less than one-third comes from Europe, Middle East, and Africa, and approximately one-third comes from throughout Asia, including China and Japan. Fourth, Apple's gross profit or margin on its products has increased all the way up to 43% in 2022. So, for example, in 2022, if Apple sells an iPhone for $1,000, it makes $430 before other indirect costs. In contrast, Dell Computer's gross margin is 22%. So if Dell sells a computer for $1,000, it only makes $220 in gross profit before other indirect costs. As you can see, there was a large bump in gross profit between 2020 and 2021. This bump occurred because, number one, a change in the mix of Apple's product sales to a more profitable mix of products. Number two, increased leverage over suppliers. And three, favorable foreign exchange rates. Fifth, Apple has controlled costs by holding its selling, general, and administrative expenses relatively constant as a percentage of revenue. As you can see, that figure has ranged tightly between about 6% and 7% of revenue. Overall, on an absolute basis, costs have gone up, but as a percentage of revenue, they've held constant over the last 10 years, which is impressive given how much Apple has grown in the last 20 years. Sixth, the most impressive and most influential indicator of Apple's economic vitality, in our opinion, is the volume of money Apple spends on research and development of its products and services. As indicated in the bar chart, Apple's R&D has increased sixfold from $4 billion in 2013 to $25 billion in 2022. That $25 billion spent in 2022 will pay rich dividends for years to come. This is a staggering amount of money. It's more than the tax revenue collected by 34 states in 2021. As a percentage of revenue, Apple's R&D increased between 2013 and 2020 from 3% to 7% respectively, but then remained relatively constant between 2020 and 2022. Seventh, Apple's net income has increased almost threefold between 2013 and 2020 from $37 billion to $100 billion. The big bump between 2020 and 2021 was spurred by COVID-19, causing lockdown consumers to buy iPhones and laptops, as well as surging demand in China. In comparison, Apple's 2022 net income is the greatest among the highest weighted stocks in the S&P 500 index and among the FANG stocks by about 25% at $100 billion. Again, this is a staggering sum of money. It is greater than tax revenue collected by 49 of the 50 states in 2021. The only state with higher tax revenue in 2021 was California at $248 billion. Eighth, and truly amazing, is the volume of equity Apple returns to its shareholders in the form of dividends and stock buybacks. Dividends are cash that goes directly to shareholders. Stock buybacks result in fewer Apple shares of stock trading in the marketplace, which in turn increases stock price if demand for the stock remains constant. Apple's dividends and stock buybacks total approximately $675 billion between 2013 and 2022. In comparison, the federal government collected tax revenue of $395 billion from all corporations in 2021. So Apple's return of equity to its shareholders over the last 10 years was almost double the corporate tax revenue the US government collected in 2021 alone. Wow. Ninth, we believe Apple has a highly effective management team. For example, for every dollar of compensation Apple paid to its CEO, CFO, and next three highest paid executives, it earned $527,000 of net income in 2021. In contrast, General Electric lost approximately $78,000 in net income for every dollar it paid to its executive team in 2021. Finally, Apple has an incredible advantage over its competitors based on its sheer size and scale. To give you some perspective, Apple's 2021 revenue was greater than the GDP of the 182 countries of the world that are colored in red. Those competitive advantages include product pricing power, leverage over its suppliers, access to talent, global reach, brand recognition, and capitalization of its operations, just to name a few. In addition to those 10 points, our recommendation to buy Apple stock is also based on our forecast that Apple stock could rise to an estimated $187 per share in 2023. We will discuss our analysis and assumptions informing this opinion in an upcoming presentation, so stay tuned. Based on the foregoing discussion and analysis, we recommend a buy rating for Apple stock. Thank you for watching, and please subscribe, like, comment, and share. Please also pause this presentation and review the disclaimer before you acquire any stock.